Alright traders, welcome back to Aditech FX. In today's video, I'll be showing you my simple trading strategy that works on all financial markets, right? So this trading strategy is what you all are familiarized with, which is ICT concept or smart money concept. So what are the things we are going to learn in this video? We are going to learn liquidity, we are going to learn order block, we are going to learn fair value gaps, we are going to learn breaker blocks, mitigation blocks, injection blocks, premium and discount levels with the Fibonacci tool. If this is the kind of content you like to watch, ensure you like and subscribe to this YouTube channel and turn on the bell notification. Without further ado, let's get started. Alright traders, welcome back. So we are starting with liquidity, right? So what is liquidity? What is liquidity? Liquidity is a positive aspect of the market, referring to the ease of trading. Liquidity can also mean a negative event where your trades are forcibly closed due to insufficient margin, proper risk due to insufficient margin, right? And proper risk management is crucial to avoid liquidation. Now, let me explain this in a simpler way. Now, when we are talking about liquidity, liquidity in forex trading is just simply refers to ease of trading. When there's a lot of liquidity in the market, right, then traders traders tends to eat their take profit easily, right? So when maybe you click buy or sell, when there's enough liquidity in the market, then your trades will trigger quickly in profits or whether in losses, right? So liquidity in simple term is just refers to money, right? Money in the market. So we simply trade money in the forex market. So liquidity just helps once there's liquidity in the market. Once price is able to grab liquidity, then you can be able to know where the market is going to. So that is why liquidity is very important in trading, right? So how can we spot liquidity on the chart? Liquidity is found on highs and lows in the market. Assuming we have a price action like this where we're in an uptrend, right? Forming series of higher highs, higher lows, higher highs, higher lows, right? Now where can we find liquidities on the chart? Liquidity is right here. Liquidity is right here. These are highs, right? Liquidity is also right here. These are highs in the market, and liquidity is resting right here. Liquidity is resting right here. Liquidity is resting right here. So these are areas you can find liquidities on the in the market, right? So we have what is called buy side liquidity and sell side liquidity, right? So buy side liquidity is found on major highs in the market. So this one is called buy side liquidity, while this one is called sell side liquidity. This one is also buy side liquidity, this is sell side liquidity. So let me identify it. So this is a size sell side liquidity, this is a buy side liquidity. Buy side liquidity. You guys understand? This is a buy side liquidity and this is a sell side liquidity. Simple. So what next? Now we have what is called order block. So what is order block? Order block is simply the last bearish or bullish candlestick before a break of structure, whether we're in an uptrend or downtrend. Now, assuming we're in an uptrend, right, and price is breaking structures to the upside, right? So when you have a break of structure, this is a break of structure. When price is breaking structures to the upside, you mark it as a break of structure, BOS. Now, the last bearish candlestick before the break of structure will be your order block, right? So we expect price to come back after breaking structure. We expect price to come back to the order block and continue going in the intended direction, right? So this is for a bullish order block, right? This is a bullish order block, bullish order block, right? Now for a bearish order block, let's say price is breaking structures to the downside, right? This is a break of structure. This is a break of structure. right? There's another block right here, right? This is also another block. So now this is a bearish order block. Bearish order block. Why is it a bearish order block? Because it is the last bullish candlestick before the break of structure to the downside. Don't worry, I'll show you on the chart. So this is a bearish order block. You simply mark it out and you are going to find an entry right here. So that is basically what we use order block for in the ICT concept. So what next? We have what is called FVG and imbalance. All right, we have what is called FVG and imbalance. So FVG simply means liquidity voids in the market when there's a lot of selling prayers or buying prayers in the market, right? So I'll be back. I can only show you this on the chart. So we'll be back on fair value gap. It's very easy to spot. So what we have next is called breaker block. So what is a breaker block? Breaker block simply involves a resistance becoming a support or a support becoming a resistance, right? So let's assume we're in an uptrend, right? And price is breaking structures to the upside. What do you expect price to do when it gets to another block? Remember, I just told you now that after we have a break of structure, we have another block, and we expect price to come to it and continue going up. But if price fails to respect the other blocks, then you can use it as a sell opportunity, right? This was our order block, right? Price failed to respect it and broke it. Then you can wait for the retest. Then it becomes a breaker block. Becomes a breaker block, a bearish breaker block, right? So you can then look for a short position right there. And be able to look for a short position right from that point and target a any risk to reward you will like, right? So this is a breaker block, a bearish breaker block, right? Now, what about a bullish breaker block? Let's assume we're in a downtrend and price is breaking structures to the downside. Now, we expect price to respect this other block, but price simply broke it and retested it. It becomes a bullish breaker block, right? We expect price to respect it and go down, but price simply broke it and retested it. So it is called a bullish breaker block, right? Now, there's also a term associated with this breaker block. So it involves price taking out both buy side liquidity and sell side liquidity. You can also call it a break of structure and a change of character, right? So price will break structure and change character, right? So it's an entry opportunity around any point of interest. You can be able to use this breaker block for an entry opportunity. So let's say price tapped into a key level on an higher time frame, maybe 2 hours time frame. Then when price shift structure like this, after price gave it the last break of structure and did the market structure shift or a change of character, because then the sellers are ending and buyers are coming into the market. So can be able to use this breaker block as a buy signal, a buy opportunity. So it becomes a bullish breaker blocks. So there are some confluences that you use to know if price is going to use a breaker block, right? Or if price is going to use another block. So we will be back to that. So I hope you guys have understand the meaning of breaker block now. So the next thing is in the list is mitigation block. So what is a mitigation block? Let's assume we're in a downtrend and price is just breaking structure to the downside, right? Now a mitigation block is simply these zones, right? It's just like an order block also. It's just that price failed to break structure, right? Price failed to take out this liquidity. So price simply did something like this and crashed down. So this zone becomes your mitigation block, right? Becomes your mitigation block. This is also a mitigation block. It's just a resistance becoming, or a support becoming a resistance, or a resistance becoming a support. In this case, this was a support becoming a resistance, right? So now let's draw for a bullish mitigation block, right? When price is breaking structures to the upside, expect price to come back to mitigation blocks, right? So this is our mitigation block for the case of bullish mitigation block. So you can see that price failed to break this high, or this low, I mean, or you can simply say price failed to take out this liquidity right here. Now what I told you earlier is that liquidity rests on both highs and lows in the market. So when price fails to take out liquidity and break structure to the upside, then price tends to use mitigation blocks to continue, right? This is also a mitigation block. I hope you guys understand now. So there's a common similarity with the breaker block and mitigation block. It's just that in breaker block, price will take out both liquidities, both buy side and sell side, right? You can see price, but according to mitigation block, price is unable to take out this liquidity, but after it breaks structure to the upside, expect it to come back. So that's just basically how mitigation block works. Now rejection block also, I'll also show you on the chart. Now we also have premium and discount with the fib 2. This is our Fibonacci 2. So where can you find Fibonacci 2? Is on your trading view. Once you come to this zone right here, so it is the first one right here, fib retracement 2. So when you pick it, you will find a default template, but this is how I did my own according to ICT, right? Now what is the usefulness of this Fibonacci 2? As if you notice, we have 0, 50%, and 100%. Just ignore these two numbers for now. We have 0, 50%, and 100%. Now the zone below this 50% is called discount, right? All the zones below this 50% is called discount, right? Why all the zones above this 50% is called premium, right? So we have what is called discount and premium. This one is called discount, and this one is called what? Premium. Premium zone. So discount means you are buying at the discount. Let's say you go to the market now, you're interested in buying a product at a cheaper price, right? And maybe you are an wholesaler that you want to resell it, so you're interested in buying it at a discount price and selling it at an high price. So that's just basically how it works in trading. So you're interested in buying a particular asset when it is cheap, when it is cheaper, then you sell it when it is high. So in trading, once you mark out your Fibonacci 2, you are buying at discount and you are selling at premium. So now let's take a price action. For example, maybe we're in an uptrend like this, higher highs, higher lows. Now for you to catch the next zone price is going to use, for you to catch the next zone that price is going to use to continue buying, that is where you are going to use your Fibonacci 2 to bring it from the low to the high, where the reversal is starting to occur. Now the zone you should be looking for buying opportunities is below this 50%. Is below this 50%. Now this is when you need to pay close attention to your 61.8 and 78.6 zone, right? So the zone within this 61.8 and 78.6 is called OTE, right? It's called OTE, optimum trade entry, right? So any zone within this range is called OTE. So you can be able to find an order block, a fair value gap, a breaker block, or a mitigation block, or any institutional reference point. You can be able to find it there and be able to take your trade, right? So you're interested in buying at discount, but if you, maybe let's say for example you found a zone around this place, it is not valid. Price sometimes will just crash down and use the zone under this 50%, which is our discount, to continue buying. So you never buy at premium. You are not interested in buying when the price is high. You're interested in buying when price is low. So that is the usefulness of the fib tool, for you to know the next zone price is going to use, right? So now let's dive into our chart to show you live samples of what I've taught you guys. And also, we left some some part untouched, which is our fair value gap and rejection block. So I'll show you on the chart right now. So let's switch to a currency pair. You can actually use this strategy on any currency pair. So let's start with Euro USD, right? So let's start with Euro USD. So this is Euro USD, and starting from our 2 hours time frame, based on the strategy, we're starting from 2 hours time frame and getting an entry on 30 minutes time frame or 15 minutes time frame, right? So based on the current trend of the market, this is Euro USD. Based on the current trend of the market, we are obviously bullish, right? We're in an uptrend, price is breaking structures to the upside. This is a break of structure, right? So this is how you mark it out on the charts. So this is a break of structure. Now, where is liquidity lying on this chart now? Liquidity is resting right on this low. So what did I call it? It's called sell side liquidity, right? And this is also a buy side liquidity. Price has taken out this buy side liquidity. So when price is able to take out a buy side liquidity with the body of the candle, it becomes a break of structure. No, price broke structure to the upside now. So where is our order block right here? Our order block is simply the last bearish candlestick before the break of structure. You can see this last sell candle. So that is your order block. You just bring it out, and we expect price to come back to the order block in the full shot before going up, right? Now, this is our order block. Now, where can we find fair value gap or imbalance, right? Now, we have a perfect example of fair value gap right here. You can see this massive candlestick right here. Now, the gap between the first and the third candle is called imbalance, which is fair value gap, right? So you mark it from the high of this week to the low of this week. So it's called your imbalance, which is fair value gap, right? This is our fair value gap, and this is our order block. I hope guys understand, right? So when we have a break of structure to the upside and we have another block and you have a fair value gap, it makes your trade a valid trade. It makes this other block a very valid one, right? So if you are looking for a buy opportunity in another block, always make sure there is an imbalance. There's also an imbalance right here, which is a fair value gap, right? I hope you guys are seeing it. We also have imbalance right here, right? Now, what about breaker blocks and mitigation blocks, right? Now, this is also this is what this is a mitigation block. This is a mitigation block. Why is it a mitigation block? I told you guys that when price fails to take out sell side liquidity, right? You can see after price broke structure to the upside, it came to use this is also a mitigation block, but price failed to touch it, right? Now price again broke structure to the upside. So what did I tell you about mitigation block? A resistance becomes becoming a support, right? When you have price action like this, right? This is called a mitigation block. When price fails to take out the low right here. So price failed to take out this low. This is a liquidity, right? Price failed to take out this zone before crashing up, right? So it becomes a mitigation block. So this is a mitigation block. This is a perfect example of mitigation block. So Price price can also use this mitigation block to continue buying. Price can decide to use this mitigation block to continue buying. I hope you guys are following now. So now what is next? We also have what is called rejection blocks. Rejection blocks. So let's find rejection blocks on the chart. Mm, okay, I think we have a rejection block right here. You can see this long wick right here. It is called a rejection block. So this is how you mark it. You mark it from the eye to the last part of the wick right here. So that is called your rejection block. So price tends to come back to the rejection block and continue selling, right? So that is a rejection block. So let me show you another example of rejection block. Um, there are some rejection blocks that are not valid also. You can decide to pick this as a rejection block. The highest wick, right? So you can see price fail to respect it. Although price consolidated a little bit around this zone, but price failed to respect it. So now I think I'll be able to explain what rejection block is. Anytime you find a a long candlestick on the chart, just mark the high or the low of the candlestick and drag it. It will become your rejection block. Now let's dive into fair value gaps. How can you take trades with fair value gaps? Now based on the current price action right here, price is in an uptrend, right? We are bullish, and we also have an imbalance right here. This is a fair value gap, a bullish fair value gap, right? A bullish fair value gap. You can see how price broke structures to the upside and came back and respected this fair value gap before continue buying. So now before you can know if an institutional reference point, what is an institutional reference point? An institutional reference point is basically all these ICT concepts I've taught you guys. So if you are taking trade from any of these concepts, you must make sure liquidity is present, right? Now I told you guys that we have liquidity resting on lows, old lows right here. So this is what a sell side liquidity. So price, anytime you want to take trade, always make sure price sweeps liquidity before tapping into your zone. If there's no liquidity, then your zone is actually the liquidity. So you make sure you spot the liquidity or you either become the liquidity. So we have a sell side liquidity right here. Price has taken it, and we also have a trend line liquidity. This is a trend line liquidity. A lot of retail traders are looking to buy from this point, right? Buying from this point, buy from this point also, and also buying from this point, and they will obviously put their stop loss below this trend line. You see that price will hit their stop loss, right? So it is called liquidation. When price triggers your stop losses and now moved in your direction, it is because you fail to identify the liquidity on the chart. So you have to exercise patience and mark out the liquidity, right? So this is a trend line liquidity, and we also have a sell side liquidity right here. Now for you to look for a buying opportunity on this fair value gap, you know there's what we call confirmation entry, right? That is when you need to go to your 30 minutes time frame or 15 minutes time frame. So switching to the 30 minutes time frame to find a buy opportunity from that zone. So if you want to look for a confirmation if price is going to use that zone to continue buying, this it is going to come in form of retracement on the lower time frame, right? So immediately price gets to that point of interest on our higher time frame, price will do what? Price will shift structure or a change of character. Then you can look to buy, right? So price will do something like this. You know, price was breaking structure, breaking structure, breaking structure, right? And price finally broke this high, showcasing buyers are entering into this market. That is after price has touched the key level on our higher time frame. Then you can use a zone right here to buy, which can either be an order block or a breaker block or a mitigation block or a fair value gap. So let's see a scenario right here. You can see we have this little break of structure, and price shifted structure immediately, right? Price shifted structure. So for this entry, you can actually use a what? A breaker block right here for this entry. See a failed order block. Price broke structure and failed to respect it, so it becomes a breaker block. So that is a confirmation entry, and you simply place your stop loss below this zone, right? And target the buy side liquidity on our higher time frame. So where's our buy side liquidity? Remember I told you guys that after price sweeps sell side liquidity, price will target buy side liquidity. So after you have gotten your entry, you target the next liquidity, which is this zone, this old high right here. So that is the place to put your take profit, right? Perfect. So if you decide to take your profits around this zone is also okay. Around these zones, you can take partials around these zones. So these are zones you can take your profit also around this. These are liquidities, buy side liquidities. So that is it about fair value gap. How you can use fair value gap as trade entry, right? So we have be able to use a fair value gap as a trade entry right here. So let's see if we can also use another institutional reference point for a trade entry. Now you can, if you notice that this this zone right here is a failed order block. You can see price broke structure right here, right? There was a break of structure right here, and this is an order block. So what were you expecting? We expect price to respect this zone and continue going down, but because we're in an uptrend, when we're in an uptrend, never mistake a break of structure as a change of character. It's also, it means it signifies liquidity, right? But now, because we are seeing it as a support, a resistance becoming a support, right? This zone right here was a resistance. Now price broke it and retested it, so it becomes a breaker block. So this is actually a breaker block. You can see after price broke it, price came to retest it. Now for you to buy right here again, you need to wait for confirmation, because if you don't wait for confirmation, price can decide to use another institutional point to continue buying, and in this way you might hit SL before price start going your way. So that is why you need to wait for confirmation entry before taking any trade opportunity, right? So from this point, you can also go to the lower time frame. Please hold on. So from this point right here, you can also switch to the 30 minutes time frame, right? So right here you can see break of structures, break of structure, break of structure, and price actually shifted structure right here. This can also be your shift in structure, right? This is a market structure shift or a change of character, right? Now we have a fair value gap right here. So that could have been a trade entry right here. Why don't we use this order block? You know, there's an order block right here. What did I taught you about order block? The last bearish candlestick before break of structure, right? Before this market structure shift, right? Now, but because liquidity is not present on in this zone, so this order block simply becomes a liquidity zone, a what? A sell side liquidity. We expect price to sweep the liquidity and tap into this zone right here to continue buying. So switching to the 2 hours time frame, you could have gotten an entry right here and target the opposing buy side liquidity. Can you see how this strategy is simple, right? So what next again? Now, let me now come into premium and discount, which is using our Fibonacci tool, right? Now let's go back to the 30 minutes time frame. Deleting this now. You guys will notice that from this point to this point is a range, right? Now you are only interested in buying at discount that is below this 50%. Any other levels above this zone, don't look for buying opportunities. So you're only looking for buying opportunities around the discount zone, which is our 61.8 and 78.6. And as you can see how price respected this zone, right? You can see how price came and continued buying from that point, right? So we had a break of structure right here also, right? So we are only looking for buying opportunities around this zone. This is another block right here, right? You can see how price use this zone, but for you to be more conservative, right? This zone, this other block can also seem to be a liquidity because we have a fair value gap beneath it. Can you see this fair value gap right here? So price actually use this fair value gap also. So you could have caught a sniper entry right here. Could have caught a sniper entry right here and target the next buy side liquidity on our 2 hours time frame, right? So that's basically how it works. That's basically how the Fibonacci tool works, right? So this is the current price action on Euro USD. So let's go to another chart. Okay, let's take GBP USD for example. GBP USD. Now on GBP USD, basically we're in an uptrend, right? We are breaking structures to the upside. Let me go to a new chart. So perfect. Now, based on the current trade right now, are we bullish or bearish? We are obviously bullish, right? We are breaking structures to the upside. So this is actually a break of structure right here. We have a break of structure. This is another break of structure. So it means we're in an uptrend, right? Now, if you guys noticed, after this break of structure, price never price failed to respect price failed to come back to this other block, right? That is because of the a lot of buying prayers, right? So price also did a break of structure right here. This is another break of structure, right? And price gave another block right here also. Can you see how price respected this other block? And why did price respect this other block? Because price swept liquidity before breaking structure. Price swept this low before breaking structure to the upside. So this other block is a valid order block, and because it also has an imbalance, there's an imbalance right here showcasing buying pressures in the market. Also, another confluence is our liquidity. We have liquidity present, right? I know most traders will be looking to buy right here, but based on the fact that we have an unmitigated order block right here, so price has to retest this zone, looking for a buy, looking for another block above another block that has not been mitigated is wrong. So price has to mitigate that unmitigated order block, right? So this is the right zone to look for a buy opportunity. Now from this zone, you can actually switch to the 30 minutes time frame to look for a buying opportunity. So let's try switching to the 30 minutes time frame. Um okay, my network is bad. The chart is somewhere down. Okay, perfect. So can you guys see after This was a break of structure, right? This was also a break of structure, and price actually shifted structure right here. But if you noticed, price failed to come back to our entry point. This could have been a zone where you could buy. So that is one of the disadvantage of this confirmation entry. But it's always best to wait for a confirmation entry before looking for a buy opportunity. But sometimes you might miss entries, right? You can see how price dished out a lot of buying opportunities. But a proper way to do this thing, if you don't want to miss entries, after price close with the body of this candlestick right here, right? After price close with the body of this candlestick, then if you want to be more aggressive, and your stop loss will be obviously large, so you can take a buy after the candle closes immediately. After the candle closes with the body of this zone, right? So you can take a buy straight away, right, from that zone, and you can see how price respected it also. You can see how price respected the zone. So that is basically how confirmation entry works. So I hope you guys understand. So let's also look for another zone. Now, based on the current trend right here, we're breaking structures to the upside, right? This was a break of structure. This was another break of structure, right? And now we have a market structure shift right here. And what do you notice? After a market structure shift, right, you notice that price swept this liquidity right here. Price swept this buy side liquidity and shifted structure immediately. Price shifted structure immediately. So what was the entry confirmation you could have used? Now you could have used a a breaker block right here. So what is our breaker block? Our breaker block is simply this last bearish candlestick. You can see how price after price broke it. After price broke it, price retested it and continued to sell, right? You can see how price respected the zone multiple times. So you could have caught a short-term sell opportunity because based on the current trend of the market is bullish. So you can only use this zone to cash displacement to the next point of interest right here. This is another order block right here, right? You can see how price is respecting the other blocks. After price break structure, make sure you find spot the liquidity. This is the liquidity, right? This is the liquidity. And you look for confirmation on the 15-minute time frame or 30 minutes time frame and look for your buying opportunities. But currently from this zone, it is not it is not really valid to take a sell. Why? Now, based on the current trend of the market is bullish. Now, if you are trying to take a short sell, you might be targeting a very long position, right? Thinking price will hit that zone. But because of the market is bullish, and if you don't do your money management, which is setting break even, your trade will eventually go back to stop loss, right? But if we are doing it with knowledge, you can be able to take this trade and just target this zone, right? So that is just basically how it works. So it's just when you do this, it's not that you are trading against the trend, but it's called counter trading. But for you to do this, you have to do it with knowledge, right? But based on my strategy, I will always trade with the trend. The trend is your friend. So always trade with the trend. Although cashing the reversal is also profitable, but it only works like let's just say 50% of the time. So it's always best to trade with the trend. It's always best to trade with the trend of the market. So I think I'll be able to explain most of the concept I use to trade, right? So this is also a break of structure to the upside. So this is the current price chart on DBP USD, right? This is a break of structure to the downside, and price actually took out this low, right? Price actually took out this low and broke structure to the upside. So what will you call this zone right here? Is it a bullish order block? Is it a bullish breaker block or a mitigation block? You can see price took out this liquidity and broke structure to the upside. So this is a breaker block. So in the future, price should come back to this breaker block. So this is the current price action on GBP USD. For me to look for a buying opportunity, right? So I'm expecting GBP USD to do something like this and continue buying, right? So I'll look for confirmation right here to buy, right? I'll look for confirmation to buy around this breaker block. And if price fails to come back to this breaker block, then there's no problem. There are some certain times that you miss entry in the market. So it's a normal thing. You don't have to feel bad. Then we also have another block right here. We also have you have a lot of other blocks right here that you can use, that price can use. That is why you need to look for confirmation from any entry you want to take an opportunity on, whether a buying or a selling opportunity. So that's that about the strategy. So thank you guys for watching, and don't forget to like and subscribe to this YouTube channel for more content. Stay tuned and goodbye.